the one that will survive in the end is the one who has the most adaptability in the competition.
Hi everyone, this is Kevin from Askpert and welcome to the 4th edition of Askpert podcast session. Today I will be accompanied by Pak Steven Soesanto.
Hello.
He's one of our distinguished speaker coming from the banking industry, and he has more than a decade of experience in the banking and the fintech world. And today he wanted to share a little bit about his experience in the space and try to dig a little bit about understanding more about the development, especially in the banking industry and the rise of the digital bank in Indonesia. So without any further ado, Pak, I let you to introduce yourself as well if you have something to introduce.
Okay. Hello everyone. Thank you and for inviting me here. So basically, after I graduated from school, from the University of Indonesia in 2004, and then I work in banking for more than 10 years. And then after that, I moved to a fintech company for about 8 years. So yeah, basically, when in bank, I stayed in a business division, and then in fintech, I mostly work in risk and credit risk. So basically, I have maybe 2 points of knowledge, both in business and credit, I think. I think that's the introduction.
That's outstanding, but that's outstanding. That's something that we need to hear and understand more, especially about the risk in the banking, which I don't think that many actually highlighted before, as actually most of the people is actually focusing on, how to prop up yield, how to prop up net interest margin for the bank and prop up overall business. But risk is a very important factor to consider, right? Now, perhaps to start off this discussion, Pak, I would like to, wondering about your view basically on, there has been a lot of digital bank in Indonesia, as we have discussed as well, like the yellow bank and also some like the big players backed by a huge startup conglomerates and also several old players, conglomerates trying to convert or spin off and make their own digital bank, or at least trying to be a digital bank as a whole, right? So how do you see this trend, Pa? Do you see this trend is going to keep going at this rate, or do you think like there will be some, new equilibrium made in this industry where people start to think, hey, I cannot burn money that much in this one. So, how do you see this, Pa?
Yeah, okay. So, in my point of view, that I think that in Indonesia especially, I think the prospect of the digital bank is still wide open. I think since from what I see that many players in digital banks only focus on the big cities, such as Jakarta, Surabaya, Medan, and then I think mostly they haven't touched the what can I say, middle city, not big city. I think there are many cities that worth it to explore, and then also I think so when you are the first player to explore, I think most people in that area will remember you. Just maybe like if we want to give example is Gojek start first the transportation in Indonesia. Many people, every people in Indonesia remember Gojek, and then of course if I think we can use the same strategy if you are exploring a new area, uncharted area as a digital bank. I think we can copy the same strategy as Gojek. I think you will be able to survive in the long term and also gain yield or revenue. I think bigger than most of your competitor. I think so. That's why, in my opinion, in Indonesia, we still have many opportunity in digital banks.
I see. Basically, trying to tap a different kind of market from the existing players right now,
that's
right? And trying to do a different approach, right? Basically. Now, on that front, I would like to elaborate a little bit more on that front. As you know, that there has been a lot of digital banks, as I mentioned, right? And most of them is actually using the one trick pony in a sense, right? Using a high TD rate to actually harness lots of new users or push them to switch from their existing bank that they use, right? Or at least open a new account, expanding their number of banks that they have. Do you think that kind of strategy will still be used, say, like for the upcoming 2 to 3 years?
If we are mentioning 2 until 3 years ahead, I think that's a good strategy. Especially, not especially, but only works in big cities. I think. Why many players in digital bank use high rate TD to attract customer? Because the competition is already very tight. There are many players in big cities. So if a new player joins, they have to give big impact to the customers, which I think already has some or two application. They have to give big impact in the shortest term of possible.
Sounds like a direct impact to their wallet, basically.
Because we know if we are talking about psychology, I think everyone needs money. I think that's the basic needs, and that's the thing that will attract people more than other strategies such as variety of services, and I think maybe about the application. I think high TD rate or maybe high saving accounts rate. I think that thing that will give the biggest impact for the customer in the big city, since there are many competitors in it.
I see.
So, but as you said before, it only works in the short term, I think. From my personal opinion, if we want to survive, we must not only depend on high rate for TD, because just like you said, it's burning money. So if all the players want to play like that, so it's just the question: who has the biggest wallet?
Who has the biggest wallet? Who has the biggest backer? Right? I see. So basically, at the end of the day, is that who has the biggest wallet, lah, Pak, in this space?
That's right.
Because this kind of way is actually being used by everyone, right? So at the end of the day, consumer need to be cherry picking which one is beneficial for them and everything, right?
Yeah, because I think the consumer, I think. In digital banking, we cannot expect customer to form a loyalty, since it is. I think it's still in the early stage. They can freely go to one application, one bank to other banks, so that's why if the only strategy is for giving high rate TD, I think it will not effective in the long term.
I see, but it's still being used, in the short term and everything.
I think because it is the easiest way, the shortest way to make your name known in the market.
I understand. So basically, in this first segment, the point here is that the usage of this TD rate to penetrate the market go to market for these digital banks will still be used by the current digital banks and also the upcoming digital banks in the short run. So hence we still see that who has the biggest wallet will be beneficial at this stage right now.
Yeah, that's right.
That's the point on the segment. Now in the second segment, Pak, we're going to talk more about the loan side of the business now. So, as your experience is actually mostly heavy in the loan channeling business and everything, would you mind to elaborate a little bit? What is loan channeling, and how do you make business from this from a perspective of digital bank?
Okay, So the loan channeling is about cooperation between banks, mostly between banks and the fintech company. So the banks will give the loan to the fintech company based on their rule. So of course, at the first point, we have to assess the fintech company whether they are worthy to be given the loan, and then also at the end of the day, when we decide to give the loan to the fintech company, of course there are several covenants and requirements for the fintech company. So basically, at the other side, the fintech company, if they already have the limit from the banks, of course they have to use the limit to finance their operation, to give loan to the public, So, but they can only give loans which is suitable with the requirement from the bank. That's why there are usually they make the list of the name of the people who wants to apply for the loan, and then they give them to the banks, and then the bank check, okay, this one is fits the criteria, this one is not. I think so. Basically, if they are submitting about let's say 1 billion IDR, maybe the banks only approve about 800 million, 500 million. So basically, the fintech has to adjust their risk appetite the same as the bank.
I see. So basically, the assessment of who gets the money, who gets the loan from the fintech company, which you back, say for example, as a digital bank, is depending on the digital bank criteria, not on the fintech criteria.
Yes.
Understand?
Yeah, of course, the criteria can be discussed from the bank and
the fintech, and they discuss about.
Yeah, but still, the decision maker is the bank.
It's the bank, basically. Yeah. So basically, the bank will give, as you mentioned before, a certain rate to the fintech, right?
Yeah.
Do you mind to mention a little bit about what kind of rate are we talking about right now?
Usually, basically the interest rate for the fintech. Since the bank, especially digital banks, have a higher rate in funding, of course they have to give more higher than the funding itself. So one of the market that can absorb the higher rate of lending, fintech company. So basically, when in Indonesia, if the working capital loan average in conventional bank is about maybe 14%, so we can give to the fintech company about 17-20%.
17 to 20% that you give to the fintech company. Then this fintech company will charge higher yields to their end customers.
Yes.
Like around how much, Pak? Do you have any idea?
Yeah, I think it's about 0.1 until 0.3.
0.1 to 0.3%
per day. Yeah.
Wow, that's huge.
Yeah.
I see. That's very interesting, Pak. And in this kind of business has been there for, and very enticing for investors as well, right? As you see, like lots of fintech companies. As fintech, by fintech here, I think we mostly discuss about P2P, is it?
Fintech company is basically the company that use application for people to apply.
Yep, but
that's the definition. Yes. But P2P is a little bit different. Peer-to-peer, it means that the public will also fund the money to be disbursed to the public. That's P2P.
Yes.
So it's a bit different between fintech and P2P.
Yes, true. Now, but in the context of like digital banks, your customers, if you're talking about fintech, what kind of fintech are we talking about? I mean, like, are we talking about P2P or are we talking about other kind of fintech usually?
All kind of fintech.
All kind of fintech.
Yeah, our target market back then is all kind of fintech. So basically, we also include the one who provide personal loan, also the one who provide working capital loan, and also maybe the one who provide like supply chain financing.
Basically, financing and loan segment kind of business, right?
Yeah.
Understand. I see. Very interesting. Very interesting, Pak. And especially as we see, like there has been a lot of cases lately about these fintech companies as well, regarding about the rise of the NPL and everything, right? So I bet, is it one of your criteria as well to see about the situation of the non-performing loans in the fintech company before you guys disperse the loan to them?
Yeah, that's one of the criteria that we are using to see if the fintech is good or not. Yeah, that's why we are using several tier for the fintech company. Like I said before, tier A, B, C, D, E. A has the lowest risk, and maybe E has the highest risk. And then to determine the A, B, C, D, E, we have to check several criteria for the fintech. One of them is the NPL number.
I see. Do you mind to mention a little bit more about the criterias? I think we haven't touched a little bit about that.
Okay.
NPL is one of them, definitely.
Yeah.
Do you have any others aforementioned criteria that you can mention to us?
Yeah. Okay. So number one is about the disbursed number. Of course, if the disbursed numbers is increasing each year, of course, that is one of the sign that they are doing well. And then the other criteria is about the number of user that applied. I think that's the same as the number of disbursed. So the bigger the number is better. Yeah, since it means that the company can reach out more customer. And then the other criteria is also about the person behind the fintech or the company behind the fintech. Shareholder, the top management. We have to check their profiles to determine whether it is bad people or good people, you know. And then also we have to check about their repayment capability also. If we see that their revenue is not enough to pay, of course we won't give them any money. So we have to check also if they are already receiving lending from other banks. How many? And then also
this is the fintech, whether the fintech has received lending for the other bank.
Yeah.
Okay, understand.
Yeah. So we are avoiding about the side streaming, and then if they already has bigger about working capital, so we are avoiding about over financing. Yeah. So unless they can prove to us that in the next term or next year they can grow maybe 20%, 30%, 40%, then maybe we can approve them.
I see. I'm trying to talk to with a different situation now, Pak. Do you have ever occurred to you find out a situation where there is a fintech that cannot pay?
Yes.
And what do you do? What do you guys do about it? I mean, like from a digital banking perspective, what do you do about it?
Yeah.
Do you put it straight to the provision? I mean, like straight to the NPL or what?
No, of course. Okay, let me give you a hint. So basically, when we analyze that fintech, of course we have to take precaution whether so we can give them requirement for deposit.
Or they have put deposit as well.
Yeah, they put deposit just to prevent if they suffer losses.
I see.
Yeah, and then also maybe we can make them to provide maybe personal guarantee or corporate guarantee.
I see.
Yeah.
So, for example, they take a loan, $100 million from you. How much deposit do you usually ask them for to do?
In average, yeah,
because it varies, of course, case by case, right?
Yeah. In average, about 10 to 25%.
10 to 25% out of the total loan outstanding that they're going to withdraw from your bank.
Yeah, depends on the risk tier that I mentioned before, A, B, C, D, E.
Yep, understand. We've been talking about conventional bank and also digital banks, right? As you know that the existing conventional bank, like the giants in Indonesia, the big players in Indonesia, are trying to be more digital in this case, right?
Yep.
They spend more capex on their IT, huge one, even much bigger than even the current digital banks that we so-called the biggest digital bank. And they're trying to be more digital, right?
Yeah.
And on the other hand, we see like lots of these small new players the new digital banks backed by conglomerates or like a spin-off of these conventional banks, right? Trying to tap the market, right? Now, based on your observation now, based on these two types of banks that we see right now in the eyes of the consumer, what are the key success factors that you can share to us that might determine the success of these two types of banks in the short term or in the long term?
Okay, so basically the first thing that we have to decide as maybe as the owner of the bank or maybe as the decision maker of the bank, it is to choose which strategy that we are using when entering the digital banking competition. Number one is whether we are willing to compete in burning money. Or number two, we can avoid that and choose not to compete directly in burning money. We just have to penetrate the market, maybe at the, let's say, at the beginning of the business, maybe using high TD rate. I think that's the common sense right now to give like I said before, to give the biggest impact in the shortest time possible
to the consumer,
to the consumer. And then after that, I think in my personal opinion, the one that will survive in the end is the one who has the most adaptability in the competition. So the digital banks player have to adapt not just maybe from the regulation of the government, also maybe they have to consider about the macroeconomics, and then they also have to consider about the public needs, maybe what's on trend right now in the market, or maybe if they are targeting a special segment like maybe the middle-aged people or maybe people with age 20 to 30. I think that requires a different strategy. I think, but the most important thing is they have to adapt to what people need, to what if you have the specific target market, you have to adapt to their needs. And then also, I think if you can adapt to them, I think you can survive. Why? Because if you just, let's say, like in the competition, like what can I use? The gladiator in Rome. I think if you want to survive, of course you have to have a good weapon, good armor, and then, but it not only depend on this two. You have to use strategy.
But yes,
especially if it's like a battle royale, so you have to use strategy. Maybe you have to know when to attack, when to defend, when to run.
It is a battle royale with this kind of players, lots of players in the market. It is a battle royale.
That's why the key is to adapt. So the decision maker, the top management, have to think flexible. I think for the all people who have the fixed mindset, I think it's a bit hard. But actually, in digital banking, you have to adapt in everything. Technology, of course, you have to adapt. Maybe right now we can see that there are several players using AI. We can use AI for behavior analysis to see what the market wants, to see what the market needs, and then you have to also adapt to. Maybe you have to be partnering with other players outside the digital banking, maybe fintech, maybe e-commerce platform, and other things. So basically, the word adapt to is not only about rate, but about everything around you. So I think that's in my opinion, that's the most important thing, to adapt.
I totally agree, because perhaps at the end of the day, digital bank is still a startup anyway, right, Pak?
Yeah.
In a way, right?
Yeah.
So
they also have the runway, I think, because they cannot burning money forever.
I wish they can burn. I mean, like they wish they can burn money forever, but it's not going to be the case, right? The money, it's not a cheap money era anymore right now, especially, right?
So in my previous example, if we're talking about Gojek, of course they penetrate the market first, but if they did not adapt, they did not give other feature in their apps like maybe GoFood or maybe other thing, Go Bills or maybe other things, I think they will not survive. So if we see before, there are many transportation companies, Gojek, Grab, and then now Maxim, and then also before we have Uber, Of course, burning money in competition is inevitable. But at the end of the day, you have to adapt. You have to give more added value to the customer. That's why you can survive. So, burning money, is it good? Maybe for the first part of your journey. But if you want to last forever, I think you have to adapt. If you want to sustain, you have to adapt.
Perhaps not last forever. Perhaps being the last one, right? Just being the last one in the market. I think I totally agree with you. Being adaptable is actually quite the key, right? Yeah. But again, of course, in the banking sector, it's quite tricky in a way, especially not only the banking sector, in the financial sector, where this adaptability or these new features that need to being adapted to the demand of the market or the end user demand need also to be matched with the regulation, right, Pak? And that's the thing, right? I mean, like, if we're talking about non-financial sector, perhaps they're easier to navigate and everything, but perhaps if we're talking about financial sector, especially banking sector, it definitely needs to engage with several stakeholders and regulations that we need to navigate here. So it's a little bit it's a little bit more tricky, right? I think.
I think the regulation. I think if I always like to do example, So regulation, I think if we are doing example, I think it's about like fixed cost. And then the other thing, the variable cost is the other thing outside the regulation. I think that's what I'm talking before, like what the people needs, and then what more can you give other than the rate, high rate? Maybe you can offer other products which you collaborate with
e-commerce fintech or other e-commerce player or travel agents or whatever it is.
That's the variable cost. In my example, that's a variable cost. Regulation is just a fixed cost. Like it or not, you have to adjust to the regulation. But the variable cost, it is an option. Whether you are willing to change, to adapt, it is an option. Regulation fixed. You have to adjust to the regulation or else you're out.
I see.
So the variable cost is an option whether you are willing or not.
I see. So basically, we're talking about who has the biggest wallet right now to penetrate the market, right? And secondly is the execution part, where who can be most nimble to adjust with the market, basically market demands, and which I think it's actually quite makes sense, right? Because we see that at the end of the day, the customer is the king.
Yes,
right?
That's right.
They determine who lasts last, versus who's going to be out of the market soon.
Yeah, you have to able to please the market.
Indeed.
But it's not about the money. It's not all about the money.
It's not all about the money. Perhaps it's a short, as you mentioned. Perhaps it's a quick win. It's a quick win, but it's not everything, basically.
It's not the end of the game.
It's not the end of the game. Right. Okay, I understand. I think it has been a very insightful discussion, Pak, with you, and I really hope that we can have another session of this and talk more about another different angle of digital banks and see how it progress along the way, who execute better compared to the others, and try to just take a look at how things develop in the upcoming 1 to 2 years. As the era has now changed now, guys, you know, like back then when the shareholder is having a shareholder of these banks is actually, the easy money era to give more investments to these banks. Money would not be that of an issue now as the winter comes and people are looking for investment, which is not as easy as before. It might be a tricky part, right? As you know. So as Pak Steven has mentioned as well, regarding the wallet size and also the execution part of the business. So I think that's all for this podcast session, Pak. I will be very, very grateful to have you in this session.
Thank you.
And we look forward to have another session with you to talk more about it.
My pleasure.
Thank you very much, Pak.
Thank you.
Thank you.
Thank you, guys.
Thank you.